Hey, this is Travis Wilkerson, the 2019 U.S. Investing Champion for the Futures and Options Division, as well as author of the best-selling book, Option Trading Made Simple. But most people know me as Trader Travis online. And today what I want to do is give a quick market update as well as an update on the trades I place based on the strategies that are taught in my most recent book. So this one will be short because now I am mostly a passive investor. I had a lot of life challenges a few years back, deaths in the family, strokes, things like that, caring for an aging parent. So I shifted up my style now and I'm not as active of an investor. Right now, currently, for 90% of my investments, I place one simple trade once a year and it takes me less than 10 minutes. And that's what I taught inside of my book here. Now, as a complimentary for those who don't get my weekly email updates, what I do is inside the book, there's a link. You can join the book bonus email list. Every week, I send an email update of my market thoughts, as well as updates on the trade. And then roughly once a month, I'll do this update here on YouTube. So what we're looking at here is one of the strategies taught is what we call a Buffett call option. It's mirrored and based on an option strategy I learned from Warren Buffett. A lot of people don't know he uses options. And so I cover that in the book. And profits aren't, that exciting, but they're still profits when a lot of people lose money trading options. And so so this is a classic Buffett call option that's taught in the book. It's up $175 or a 3% return on my money. This one was a bonus I was trying to add in, showing people, hey, if you don't have like 5-6 grand, you can buy call options via debit call spreads. It's just a cheaper way to get in a call option, but it was confusing, at least one person, because it's not taught in the book. I was just trying to add it as a bonus, show people extra stuff. Over deliver, but sometimes, hey, it backfires, so it's confusing, so on. So I still have it here. It's up $380, but I'm going to, once I cash this out profit-wise, I'm not going to continue this case study. I'm just going to continue this single call option because that's what's really covered in the book. So anyway, this is doing okay. So now what I want to do is switch to another template that's taught in the book. Is called the DMA template. Now, DMA stands for Daily Moving Average, and this one was placed a little bit later than the Buffett call option, and it's currently down about $240. And so now what I want to do is switch to look at the general market and give my thoughts on what I think the market will do moving forward. So I've already covered this in an email list to my newsletter subscribers, but right now we are currently in, believe it or not, bullish territory. So according to what the stock chart is showing us, we are in the beginning stages of a bull market. However, the stock market likes to trick people, right? It's we can't predict the future. Just like I didn't predict this bear market, other people didn't predict it, right? We only can evaluate things in real time. Based on what I see right now in real time, we're in a bull market based on the, granddaddy of, market timing indicators, the 200-day moving average, right? But according to what I told my email subscribers is, hey, once prices break through the 200-day moving average, it's not uncommon for it to fall back down and test that level. It acts like it's a floor. They call it support, right? And so what we're looking for is that floor to hold, prices to stay above it, and then eventually go back up. But if it fails and it goes beyond the floor, then we're back into bear market territory. So it's unclear whether this is what they call a bear market rally. And let me pull up a 2-year chart here and show you some bear market rallies. Actually, I have some trend lines drawn here so you can see. We're in another video. I was highlighting the bear market rallies, and you see how this is an example of how it broke above the 200-day moving average, came back down to test it. The test failed, and it broke through, came back up to test it, and that line held, right? It was support at first, it went through, and once it goes through the line, it then becomes resistance, overhead resistance. And so it held prices. The 200-day acted kind of as a hindrance. It held prices back. It's like that invisible demand is holding me back, right? And that's what you're looking for. You're seeing what prices are going to do, and then prices finally have some strength to break through to 200 here. They're coming back to test it. So what we're seeing is, hey, is this a bear market rally? If it's a rally, prices are going to fall back through to 200, and then downward move is going to continue, and we're going to continue losing money, right? Unless you in a bearish strategies and things like that. But anywho, so all I do is place one simple trade a year. I make money, I lose money. It doesn't matter. I plan for worst case scenario. If I lose money next year, guess what? I'll show back up, place another simple trade over time, if the market continues what it's historically done, go up, I will do okay. But that doesn't mean I'm going to make money every single year. That is naive at best to think that. I never go in thinking that. I go in assuming and preparing for a max loss. Hasn't happened to date, but I go in prepared for that. And so when it happens, it's never going to destroy me financially. And that's what gets people in a lot of trouble. They plan on best case scenario. They risk too much money, and then when a bear market like happened last year, they lose too much money. Game over. They've lost all their inventory in their business. It's because they didn't plan for the rainy day. Rainy days will come. Life is messy and complicated. That is one thing you can guarantee, that life is going to get messy and complicated somewhere in the future. You just don't know when. So you always want to try to prepare for it the best way you can. And one of the ways we do that is by risking a small amount of our money when we trade options. So those are my thoughts on the market. That's what I'm looking for. I don't what is the market going to do? My standard response is don't know, don't care. I'll make money either way, right? And it's because of the strategies I use. So, all I can do is evaluate what it's doing in real time, place trades based on that. So it broke above the 200-day moving average, and I place trades based on the template again that is taught in my book here. Now, I do have other case studies I'm going. Maybe I'll profile them here on YouTube. They are going to be in books that are coming out maybe the next 6 months to a year. Maybe I'll also start profiling those strategies with these strategies. I'm undecided on that yet, but if I do, hey, hope you enjoy it, and I look forward to adding value to your life in the coming weeks and months. So you take care, and I will see you next month's update. Bye-bye.